I'm thrilled to welcome Chad Smith to Powerhouse. 6 months ago, after more than 2 decades as an executive at various lenders, Chad became the president and COO of Better. Chad, Better has had a little bit of a difficult time with PR over the past few years. Why did you decide to take the president role at a company that has a little bit of a damaged reputation?
Yeah. Hey, Diego. Thanks so much for having me. Excited to be here. It's a great question. Candidly, I'm a little surprised at how the PR hangover, so to speak, has lasted. When Better called me, I was honored to get the call. And with what's happened in the marketplace over the last few years, with things going digital and, home buying, innovation, even as much as the NAR settlement and just dislocation, you kind of say, do I have a better chance at disrupting that and being part of a team capable of innovation and making change there? And, I don't know that there's many calls that I get, and I get a lot that seem to foot that bill more than Better. And I'm sure you're referring to, the reduction in force. I think it was a really tough time in the industry, and a lot of people were going through layoffs, and, Better was a little early there. And although that may not have been executed perfectly, one thing that I really learned and loved is Vishal owned it and stepped up and took accountability. And I had a ton of respect for that. And after meeting with the team, not just on the technology side and the innovation side, but the entire leadership team and just how mission driven they were, I knew right away I wanted to be part of it.
Yeah, Better wasn't alone when it came to downsizing, and you were on the early end, which some could view as smart and kind of reading the tea leaves. So, how do you think the mortgage industry in general can do a better job and avoid this like boom and then bust of hiring, where you hire up a bunch of people and then you let go of a bunch of people when the housing market turns south? How do you think we avoid that?
Yeah, so it's a great question, and it's something that the industry's dealt with or struggled with, for the 25 years I've been in it, right? And so I think anytime you're with a cyclical industry that's tied to macro factors such as interest rates or credit expansion or contraction, it is somewhat of a feast or famine business. It feels like through every cycle, at least from my perspective, we get a little bit better. But at the same point, when you go through those troughs, it's really hard, and, you're losing money. You're having to make tough decisions. And then when you get these glimmers of hope, you just want to catch as much of it as you can. And that's kind of been, the cycle. I think one thing, in addition, you've had a lot of regulatory changes that add cost to the transaction. And then with less volume, the cost to fulfill a mortgage goes way up. And so you kind of get into this cycle. And so with Better specifically, and I think a lot of lenders, everyone's focused on technology. And, one thing that I think Better's done an excellent job of is, we're on one system, Tinman, the machine with a heart that helps you on your journey home. And with Tinman, it's one platform. So you don't have all these different integrations. You don't have all these legacy vendor contracts. I mean, clearly you have APIs and validations and things like that. But you're not, stuck with, tremendous stranded cost. And, we've been able to, lower manufacturing costs by 35% over the industry average. And I think that really has to be the answer is, it's similar to, my view on loan officer compensation, right? People will say, how much do you pay in BIPs, or how much do you do that? And really it's, kind of the market sets compensation. This is the market value of a person. And so for me and for Better, we focus on how to make people more productive. And so if someone needs to make X at one, shop and they do 4 loans, maybe they got to do 10 loans here. Or someone does 10 loans at one shop, maybe they have to do 15 here. And so driving productivity across the entire fulfillment chain, from originator to post-closing, should limit those cycles because, you're maybe trimming less, optimizing less. I think the other thing that's a little more challenging in this environment that people miss sometimes is as you are growing, because we're starting to hopefully see some green shoots, it's also like the performance management cycle, right? Like, selling mortgages at 4% is easier than selling them at 7%. And so sometimes when you grow, people don't work out as well. And so you're trying to hire smarter, be more prudent, be more responsible, interview more carefully. Maybe you're using other forms of test or personality profiles and matching them against your successful people. So you're not just, throwing darts.
So let's talk a little bit more about Tinman, since it is a proprietary platform, end-to-end platform. And you mentioned one of the pros, which is you're not beholden to vendors with your stack. But a con can be that it's expensive to maintain and innovate on. It all comes down to, are you growing with that tech stack more than you would if you didn't have your own proprietary tech stack? So how does Tinman help Better grow and gain market share in 2025?
Yeah, great question. I do think it makes a difference. And for us, I mean, one of the things that to me blew me away, going through this journey was, at the end of the day, this company was doing like 500 million in 2017, 2018, and did 58 billion in 2021. And it's funded over 100 billion on Tinman. And so really proven the ability to scale when the market comes. And so for us in 2025, the leadership team here is very mission driven, and you feel it. There's a lot of tenure in the building. Everyone believes in the innovation of homeownership, making it easier, cheaper, faster, and giving customers more certainty higher up the food chain with our one-day mortgage and commitment letter and things like that. And so, it's really around, we're obsessed around driving costs down on the fulfillment side, right? And so, it's like, we don't rest on the laurels that we're 35% cheaper on the fulfillment side than maybe the industry average. It's like, how do you go from X to Y? And that's a question culturally that we live by every day. And so when I think about 2025 and, the margin environment, and to, kind of dovetail a little bit is, in my experience in mortgage, it was so hard to crack, purchase because, the realtor drives that transaction and we didn't have such an affordability problem. And so price, so to speak, was not as important as certainty and the realtor driving the transaction with the local loan officer. And so today, I think customers are doing a lot more homework just from an affordability perspective. And so if you can leverage technology like we have to drive the fulfillment cost lower, then ultimately the price to the consumer should be lower, and that should improve conversion. And then all of your kind of funnel economics should get better.
Do you make Tinman available to other lenders?
So we do power, other people with Tinman. Obviously, we have a relationship with Ally Bank, and we're the mortgage provider for them. We have a pipeline. We focus on that. I would say, kind of in this cycle, we've been very focused on our own house, making sure that we're making improvements, launching innovative products like Betsy, which I'm sure we'll talk about, and continuing to innovate around Tinman. Having said that, when people want fulfillment and solutions and quote unquote mortgage in a box, we certainly entertain those conversations. We focus on them, and it's part of our mission to make homeownership more accessible for all. And what kind of we're agnostic to that channel if we're fulfilling our mission.
That makes sense. Yeah, I do want to talk about Betsy. That was a really interesting press release that you put out recently. What is Betsy?
Yeah, so Betsy is really kind of the first voice-based AI loan assistant, and really in the mortgage industry, right? So, uses AI and LLMs to create solutions for consumers and help not just for consumers, but for our internal customers, right? Loan officers, processors, anyone that needs help, right? And so the thing that is awesome about Betsy is she is fully integrated with Tinman. And so if you have questions on file, what's my debt ratio? Betsy can help with all those things, which we really think kind of like creates better customer engagement, greater sales efficiency, and really just throughput productivity, right? 24/7 availability, in consumer direct specifically, getting consumers on the phone, right? Availability, all of these things that turn customer acquisition costs one way or the other. Betsy doesn't call in sick. All of those things really make a difference, right? And so I think this is not, some chatbot or some OCR recognition. We've been working feverishly on this for months. And I think if you think about non-licensed tasks that are traditionally carried on by lots of people, answering the phone, answering questions, Betsy can replace that or enhance it.
Yeah. So let's tie that to the, not doing the boom and bust in hiring. I imagine that something like Betsy would enable you to scale up on the revenue side and on the origination side without necessarily scaling up as much with your team.
That's right. So if you use consumer direct as an example, right? If you think about having to get a consumer on the phone on that channel and then get it to a licensed loan officer, there's a lot that goes into that, right? Routing, licensing, availability, how many customers in Ohio are calling and how many licensed loan officers are available. And then, despite how much transactions are done online, there's still a lot, that are done over the phone. And so how do I get that consumer on the phone? Or if they call, how do I make sure I answer quickly? And then I'm able to route that to the right person at the right time. And so this person converts higher on FHA. This person, this loan officer, is an expert in this product. This loan officer is our home equity specialist. Can Betsy answer that phone or contact that customer and get that customer to the right place at the right time and at an extremely almost near non-marginal cost compared to continuing to add, humans to do that task. So we feel very strongly about being able to scale that in 2025 and beyond, especially, what appears to be, not, some tailwinds seem to be on the horizon with the MBA forecast, but by no means does it seem, total green shoots.
Yeah. So prior to your arrival, historically, Better, it seems like, has been focused on non-traditional backgrounds when it comes to hiring their loan originators and then, growing those LOs from within. Does your arrival signal a different kind of team building and hiring? Like, are you going to go after more experienced LOs to build out the team?
Yeah, great question. So, I think if you step back and you think about Better over the history, right, and I was a competitor to them for a lot of years, and so clearly, I'm sure there was times I had very strong opinions, right, like the rest of the industry, and I think what's really great is, in a different market calls for different leadership at different times, and Better has recognized that, and so if you take some of the skill sets that maybe more traditional mortgage folks, along with the technology, fintech, and, obsession around customer experience that sometimes lacks in the mortgage business. And you marry those together, do you have special sauce? And that's what I get so excited about every morning when I wake up to go out and tackle those problems. And so, we've hired well over 100 experienced originators since my arrival, more than that, in fact. And our metrics are showing improvement. And so, I think if you're in a low rate environment with refinance, it's easier to scale and train people because, it's less nuanced, maybe a little bit less complex products, and you can kind of market more cost effectively. If your conversion is lacking just a little bit, it doesn't matter because, life is just easier on all your other funnels. And so, we're doubling down on experienced people. We've hired industry experts like Jessica Manna to come into our organization in marketing. And, kind of goes back to, most of your original question is, I've hired all these experienced people And that's why there doesn't seem to be any PR overhang for me, because I've had no problem, and I've been absolutely floored at how much inbound traffic I get from all channels of mortgage, with what we have going on here. And I think that's because there's a shift to digital, and to, I think, even in distributed retail and other channels, people are very focused on cost because they're feeling margin compression out in the field. And so people have to think differently, and you're starting to see a shift of forward thinking, and we look to capitalize on that.
Is there an ideal LO for you when you're thinking about recruiting? I imagine you need people who are comfortable with technology and excited about technology in the origination process.
Yeah. So yeah, and look, we learn on that sometimes, right? And so some people don't like change, and you're coming on, if you've been on a different platform for 10 years and you're coming onto ours, I think it's actually very easy to get up to speed on, because there's only one thing that you're really learning, one system. But I will say that, yeah, in consumer direct specifically, right, you're looking at a lot of things, licensing, experience, are you culturally aligned with our mission? And, are you a mercenary or a patriot? And, and are you passionate about serving customers? And we are customer obsessed, and we pride ourselves on doing the right thing. And so we try to target those people, right? And so, are you jumping around a lot? Are you looking for a guarantee or a sign-on bonus, or whatever, right? Or are you looking to help us change the game? And so, that's what I would say we look for. You do have to be forward thinking. You do have to be able to handle large amounts of leads with our lead ingestion machine, and serve customers in the way they want to be served, right?
Lead ingestion machine. What are you referring to there?
Yeah, I mean, I think we obviously have a pretty good brand online. Obviously there's large companies that have long-term brands that have 25 years on us. But I would say our awareness, especially online, is pretty high. So we have a lot of organic traffic that comes to our site. We have high NPS scores, customers that have gotten a transaction from us in the past. Like, we get a lot of relooks there. And so, we get quite a bit of verified pre-approvals. People go through our digital process. They love it. And our biggest opportunity is how to convert more of them, right? And so, we look for people that help us convert. So we measure those things, and we manage to those things, and we hold people accountable to those things. Because again, I think if you go back to, we're obsessed of the borrower, and we're obsessed on their experience. And so, are you helping us convert at the highest level to give that borrower a great experience? And so we have a lot that comes to the top of our funnel. Obviously, we're an online lender. I think, kind of back to your other question, if you think about a $1.5 trillion market, how many people are, comfortable doing the process online? And I think, part of hiring me and adding experienced people is, if you go back to our whole mission, which is help as many people as humanly possible achieve homeownership, it's really that higher part of the stack that we need to do a better job on. And so that's where hiring experienced people that have experience, converting versus customers being comfortable doing it all online. So we get an A+ on that. And so where I'm really focused is on, taking us to that larger part of the market segment. And it really just goes back to, meeting the customer where they want to be met. Not everyone's ready to complete a transaction 100% online.
Yeah, that totally makes sense. So I was at MBA annual recently, and you mentioned 1.5 trillion. They're actually thinking 2025 is going to be 2.3 trillion in origination. So pretty significant growth being projected by MBA. Do you agree with that projection? And how does Better get a piece of that growth?
Yeah, I think the increase is around 600 billion for the year or for next year. And so, I think forecasts are always dangerous in the mortgage business. And, I I try to plan based off the MBA forecast to the best of our ability, and then be nimble enough to adjust one way or the other.
Mm-hmm.
But it does sound like, especially in some regional, inventories coming up, right? The consumer has a longer time to digest the current interest rate environment. And so it does feel like there should be some unlocking of inventory. I think the other opportunity, by no means do I think there's going to be a huge refi boom, but you did see, some pretty good growth out of some of the publics and others over just that couple weeks where rates dropped on refi volume. And so it's really about being, in the position to catch that. And then I think the other part, we're obviously, have a great home equity business, but customers are a little bit more levered up, right? And I think you see that in all the data where you look at the credit card balances and just all the things that we all read and Logan and other people bring up and so at some point you think the deleveraging process, now whether that's home equity or cash out refinance, but there's going to be something there with how much home equity is built. The trillions of home equity that's been accumulated over the last 12 months, even, and which was on top of, year after year, huge gains, that it does seem to just feel like a better market.
Yeah, there seems to be two approaches, two strategies towards 2025 growth that I've seen out there. You have the big servicers, like Mr. Cooper, New Res, even Rocket Mortgage is building up a pretty big servicing book. They're pretty focused on building technology, including AI, to originate from their book. That's their strategy. We're going to originate from this big book that we've amassed. Then you have UWM and several of the big distributed retail lenders who are more focused on that 2025 refi boom. Where do you see Better fitting into that spectrum in terms of strategy for growth in 2025?
I agree with you on the servicers, right? And they have a lot of MSRs, and in a slow grind down, they're in a good position to capture minor refinances, right? Because they just have all the analytics and they can move a little bit quicker, and they're collecting a payment from the customer. For Better specifically, we continue to add product, right? I think if you look historically, Better has been a little bit more on the conforming jumbo side of the business. So we're really we're really proud of our one-day HELOC and some of our home equity products. That's been a growth vertical for us. And then, we've added, focus on government lending like FHA, VA, et cetera. I do think that some of the, refi activity that you will see is going to come on that government book around streamlines and IRRRLs, and maybe we'll see the agency, the FHFA do something there for Fannie and Freddie. I don't know anything, but it seems like there's talk about that. And so those types of things, and these title pilots and these other things to drive costs down. Like when you listen to the CFPB talk, they're trying to figure out how to get costs down for lenders. Right? There's lots of competition amongst lenders, but then you have some of these, verification or whatever services, and you guys have written about this, that are not as competitive, right? And so how do we drive costs down? What type of pilots can they do? What works? And then all of that helps create a refinance, right? Because if the marginal cost is less, then that borrower benefit is higher, then it starts to make sense for a consumer. And then you don't need as much market relief to create a benefit for the consumer. And so I think, VA IRRRL for our veterans, which is so important, FHA Streamline, and then other easy, not lower documentation from like a credit perspective, but lower friction, I should say, helps create opportunity. And so for Better specifically, to answer your question, it's about, being in the right place at the right time, making sure you're testing your marketing channels, making sure you're keeping a great relationship with the 100 billion on Tinman before, right? We have this huge database too. And just because we're not necessarily collecting payments from that consumer, they had a really great experience with us. So are we making sure that we're not taking them for granted?
Are you looking at non-QM at all?
Yeah, so I think we continue to look at products. Yes, to answer your question, right? I think depending on distribution channel, is how scalable is that product and where and what's the right distribution channel. But I think if you go back to our mission, which is to try to help all homeowners, in any way that we can, we want to continue to go deeper down our product funnel.
Chad, this is awesome. I'm excited about Better's prospects for 2025. Thank you so much for joining me today.
Hey, Diego, thanks so much. Appreciate all you guys do for our industry. And I look forward to my morning email from you every day. And so it's great to be here.